This is the MTPredictor weekly market update for March 17th. So we just came through an options expiration week where we typically see that the markets about 70% of the time rally into that options expiration week. And we did get that for much of the week there. As you can see here, well, let me just kind of scrunch this up so we can see where we've come and where these levels are coming from. So here's our prior high in the Dow, back in October of 2007, and we've obviously taken that out. We've taken that resistance area out. Here's our last, when we take our decision point. In fact, I'll clear this off. If we take our decision point off of that high, if I can get this on here. Okay, you see that's this area here. So that's the area that we want to pay close attention to as the Dow has taken out the prior resistance, heading for the bottom here, which is around 14,675. You can see the 15,000, nice round numbers right in there. And this goes all the way up, well, close to 16,000, the next nice round number up there. Pretty strong, like we talked about before. One of the options is they kind of blow through this resistance area, which the Dow pretty much did. Right now, if we take a look at the S&P, not although the S&P now has made new highs, it's the current futures contract. You see here was the prior high back here, and you can see we've exceeded that, and you can see the levels on the chart here. This was the prior level from this swing high, that decision point here. If I can get that on here, right there. Okay, and you can see that's where the correction started. So that's why we anticipate the potential for a correction in this area, all the way from that we talked about 1520 to 1560. You can see we closed at 1553.50 on Friday, closing out the week there. So they still haven't been able to get a close above that 1560 area. So while the Dow has powered through its resistance, the ES has powered through too, but is still in that resistance at the top end of that resistance. So again, we talk about if we can get a close above that 1560 area, and whatever that high ends up being on that particular week gets taken out to the upside, then your next kind of big round number is going to be 1600. This decision point up here is going to be off of the prior high here, again back in October of 2007. Okay, and that's this major area up here. That'll start right around that 1650, call it 1655, all the way up to almost 18. Yeah, it looks like around 1800 there, almost 1800 there. So we do have some room to move above that 1560 area all the way up to 1600, and we saw the numbers in the Dow there. So we'll see if these can continue to power through, though. Again, we're still in that resistance. We're not out of that area. We could see, or we saw that correction in this area. We certainly could still see it again here. So again, just continue to be cautious on the long side and protecting anything that you've got, retirement, pension, 401k, whatever's built, you've got to make money when the market goes up. As we know, the market doesn't always go up, so protect, still protecting that downside risk there. Now if we look at the NQ on the weekly chart here, all right, we talked about, here was that prior wave 5. Okay, we got a correction there as anticipated. And then we got the rally again here. But this rally, you can see obviously has fallen short of the other markets. The other markets are off. They've taken out these highs, whereas the NQ, let me just add a little more data to this chart. You can see where the NQ is here, all right, but whereas the S&P and the Dow have made new highs over their wave 5 prior swing highs, the NQ has failed to. Now we talked about last week we got a close above this wave 2 or B resistance area. Okay, here was our close last week, clearly above that area. We talked about if they could trade above the high of that week's candle here, then we should get a test of this area and then the decision point off of this area. Then we'd have everything in agreement, and that resistance would come in about just above 2,900. But what happened was this high, which was at 28.17, was never exceeded last week. The high was 28.08. So this sets up now what we call a market structure high, where we had a high price, a higher price, and a lower high. And similar to most of these swing highs and swing lows are all composed of that same pattern. Here just the opposite of a low, a lower low, a higher low, a high, a higher high, a lower high. These form these swing lows. So we could have a new swing coming in if they are not able to exceed, again, the high of the candle here from 28.17. If they can break that, then again we can test the high back here, and then that 2,900 area comes into play. But if they fail, and especially if they trade below last week's low, which was 27.82, 27.8250 it looks like, then the swing high may be in. And so this market not in agreement with the other markets yet. If we can want to kind of along those lines, just look at Apple here. This is the daily chart of Apple here. So you can see, I just drew the trend line here. We had a little 5-wave pattern down on the daily chart. This is kind of Apple's last hope here. When we'll look at the weekly chart in a minute, but the wave 4 decision point, right? Since we've gone wave 5 down here, typically we get a rally back to the wave 4 decision point. Well, if I put the analysis on this particular trade setup, you'll see that the software knows that's the target. All right, that target obviously that would put Apple above that trend line, which would be a bullish sign there. And then if it can get up into this area, I'll call it around that $500 level again. That's where this DP is. It's a decision point. We call it a decision point because the market needs to make a decision. In this case, Apple will need to make a decision. If this area holds as resistance, then the trend, which was down prior, should continue down. If they can take this area out to the upside, then at least they tend to wipe out this whole 5-wave pattern down. So we can go back to the top of this wave 1 here and take a new decision point, and that would be put a rally there around 565. If they can get through this area. That's the tendency anyway. If they can't, the tendency is that the trend, which was down prior, will continue down. Now if we look at the weekly chart, we talked about the very negative pattern that was set up here with the wave 5 high. Here's the wave 4 decision point. Okay, you got to close below that area. They took that area out here. We see now the little rally here from the daily chart. That's where our major support is, or that decision point buy signal was. Looking for that rally back at least to that 500 area. So we'll see how they proceed here. But again, if that fails, or if they do get up in that 500 area, can't clear it, then the danger is they'll roll this thing back down. So already where it is now, it's pointing lower, at least back to the bottom of this wave 1 here. That puts your next major support down around 260 in Apple. So interesting situation, and obviously if we get a some type of good correction in the markets, that obviously is going to impact Apple as well. So we'll keep an eye on that. All right, let's look at some of the other things here. Here's the US dollar. Again, the dollar long back here with a nice high volume spike. That was a major low in the dollar there, and here's the target there around that 85.06. Hasn't been able to quite hit that target, but has found support in here as we looked at before, and has rallied off that level. We see, well, you got a little bit of resistance that it came into here. We'll see if it can get out of that area and continue higher. So this relationship with the dollar and bonds and gold and silver, the Fed has openly talked about its plans and what it's doing for, basically it's manipulating the bond market, buying the treasuries, keeping the interest rates low. It's obviously it's manipulation. So it shouldn't be a surprise if the Fed has a hand in manipulating, let's say, gold and silver, keeping that under control, so as not to undo what it's doing in the bond market. Because if gold and silver continue to rise against the dollar, the Fed's going to lose its ability to keep those interest rates low. So let's look at the euro here. So I think we could have some reason to believe that the it's my euro here, that they're keeping a watchful eye, let's put it that way, on gold and silver and the dollar. Now here's the euro. We had our sell signal again back a few weeks ago on the euro, and as the dollar was moving higher, of course the euro has been falling. Now we've achieved this 100% initial risk line, so those clients that are short this on the larger time frame here can have their stop to break even for a risk-free trade. You see the target down there at 1832, which would certainly put the dollar to its target. Now we can take a decision point off of the B swing here, because we're going to have more support here. If we look at the daily chart, you can see this little bounce here on the weekly chart. If we go to the daily chart, you'll see that little bounce. We had a little 5-wave pattern down here in the euro on the daily chart, and so it's maybe gotten a little bounce off of that, maybe put it back in that 31.95 area, which would be that around that wave 4, where the wave 4 decision point might come in there. And then let's go ahead and look at gold and silver. Let's actually do the make sure we got enough data on this chart, the continuous contract. It's the daily chart. I want a weekly chart. And you can see in the weekly chart here, again, this kind of descending triangle. At the bottom of that support, we've seen this before. It held as support and rallied off of that, and then it's pulled back here. And so anticipate that buyers would come in here. Now with a descending triangle, typically these things do break to the downside, though it's not obviously 100%. But the longer this goes into the apex, the less power any break anyway will have. You can see the rising 200 period moving average. Again, we're below the 50 period, above the 200 period. That's typically been, as we go back, again, I got to put more data on this. That is a area where professionals like to come in and buy when this thing is in a bull market. Um, There's some nice buy signals here, but see, as we get below the 50 period but above the 200 period, here was the crash of 2008 when everything was selling off together, but major buy signal there all the way down to the 200 period. Again, all these areas below the 50 period, above the 200 period have been very good buying opportunities going back to, again here, back to 2001. But we have a period of consolidation here. We, for the first time in the last 10, 11 years, didn't have a new high in gold, and so we've seen these long periods of consolidation before as well. So you can see back here a nice long period of consolidation before this thing really broke out to the upside there. And this was again probably a kind of triangular pattern here that broke to the upside. So we'll see if this isn't the area, if they're stepping in here. Now we do have some strength on the STF to the downside here. We talked about the potential, if they do break this to the downside, to see the 200 period moving average. Wouldn't be a huge surprise. Depending, we'll see what the market does, meaning stocks anyway. But the last time we tested that 200 period, you can see the nice rally we got off of that level. And the same, we can look at silver here. Where's my silver? Looks like it should be this. But that same triangular pattern here, that succession of lower highs, and we'll just, again, that descending triangle, they're into that support, getting around that support area. We've seen this area before. Gold is in its support, and obviously this is going to, even though it's much more volatile, overall is going to follow gold. So we'll see if this can at least test the other end of the triangle. You can see it has not been able to, each successive time here, they've failed to take out the prior swing high. So if that changes, then maybe we have a break. So this could actually break above the triangle here, but until it we start closing and trading above, at least trading above these prior swing highs, it's not going to mean a whole lot. So we'll keep an eye on this. Again, below the 50 period, above the 200 period here in silver as well. It was a nice high volume spike that came in over here as well. So maybe again, signal that professionals are stepping in to buy. We'll see if we'll see if it runs, and if it runs, how far. So we'll check on that. That top of this triangle here is going to put it around about 31, a little above 31.50, we'll call it, to 31.70, somewhere in there. All right. All right, so we'll wrap it up there, and we'll be back and checking things for next week. So have a good trading week, and we'll see you back then.